Well, hello everybody. It's October 18th. This is the weekly review. We take a look at what happened, what we think will happen, given where we're at and what has taken place already. And we try to strategize on what that is and how to approach it. So, the markets last week managed gains. The biggest part of the gains, of course, in the NASDAQ again. The Russell trailed down on the year and down on the week. 3% gain so far this year on NASDAQ. It is in positive territory again. The S&P is almost back to even, and then you're trailing with the Dow and with the Russell. If we take a quick review here of what has taken place, the main thing is that this big bounce has continued. And so if we pop over to the S&P 500 and we take a look at the daily chart, we got over that swing point high on Friday, and that was a big deal, right? So if you draw it out here, you've got this swing point high, you get over the top, and so now you're pushing up right into this area, and then right above it, about 2045, is the start of that big bearish retest regenerate zone that has been out there now for quite a while. It goes up to about 2070 or so somewhere up around here. So this whole area up here is a huge resistance zone, and the way that typically works is when you come back to it, right, it was a high probability, it's more than 6 bars, you got about a 91% probability this thing is going to turn and try to come back down as a result of that. So the expectation has to be that as you get into this area, you're going to see price sold. And that's despite some of the positive things that are already formed here. For example, an ABCD structure. It takes you way up to new highs. There's just a lot of good things that have been going on recently as we come off this low that makes one wonder will this really do what it's supposed to do? Well, folks, you just have to believe it's going to do it, because that typically is what happens. The probabilities favor that. You have to expect that as it comes up into this area, they are going to come out and they're going to start selling it. And so that, to me, is the big picture, the thing that we can't lose track of, whether or not that ends up being new lows, or whether that simply means that we just get a retrace. So in other words, do we just retrace back down to here and then go at it again and maybe break it? Or do we actually retrace and then continue lower? Right now, there's nothing to suggest this, and I'm sure everybody believes it's going to be this. That's the way it works, right? But if we take this back and we put it on a bit longer term time frame, so I'm going to pull this over the weekly, and we're going to look at it in the context of a larger thing, right? And that was that from this area here, and I'll draw it from there, this was the prior range. We broke down under that range to a new range, right? So we broke down, went to the new lows, and then we broke down again, right, made new lows under that. So you have kind of 3 ranges. You're coming back up to test this range. Just as where it was testing this range, it was a lot of, even after a big push down, a lot of congestion there, and it was very hard to get up and over that. As you come back to this level, anyone and all, right, that bought in this area, right, they're all underwater, and they've had to suffer huge drawdowns. The question is will they sell when it comes back up there? Or is the belief so strong that you'll get the same sort of thing you've had before, where any kind of a push up is going to continue and we're going to get even new higher highs? Will these people sell or not? That's the question. And as we get there, we're going to find out the answer, right? You have to expect the initial reaction will be a sell. You just have to expect that. If you don't, you're kidding yourself, because that is what the probability suggests. So I have to assume that's what's going to take place. So the big bounce continues. It's coming up to the resistance. High probability it's going to try to be sold at that level. There's also a couple of other things that we should probably think about, and that is that most options expiry have resulted in selling after it. So post options expiration, you tend to get selling, has been, and that's been the case here pretty much all year. As a matter of fact, my friend Charles Kirk has pointed that out, and I did a video Friday morning about that if you want to watch it. He pointed that out. There's others that are, getting on that bandwagon. Charles has been talking about it for at least 3 or 4 months now. And so even though, maybe it's new news to others, Charles has been pointed out for some period of time. And so that's going to be a big question is, does that happen again? And if it doesn't, these bulls are going to get, even more emboldened. And turning our attention to earnings, if you look at what's happened here with earnings, the chip stocks were the leaders off of earnings this past week. Financial stocks were laggards, and that was true also of the transports and the small caps in general. So the early look at earnings shows us one group that's a big winner, another group that, it wasn't horrible. They did okay, but you saw weakness in these areas. And we could look at it on the charts, but that's generally what happened. In particular, the transports really struggled. And if you remember back, the transports, and let's pull that chart up. These transports were the first group that really broke down. So back in March, April, right? They started to break down in May, long before the rest of the market. So they were doing that consolidation up here. And then they started to break it down, right? They couldn't make new highs, and they started to break down here, and then they sold off precipitously and actually went under the October lows on less volume. That gave them a nice bounce. But here they are again, off earnings, starting to sell down again. I think that's something we have to be, aware of and pay attention to. Hong Kong and Shanghai, those stock markets are coming back. So we're seeing, from a world perspective, we're seeing some strength in those areas. And so, if you want to think about it in terms of, good and bad, here's Hong Kong. And I'm going to pull it up on the weekly. You can see it's coming back into these swing point lows. So the good is that it's bouncing. The bad is hey, it's just coming back to do that bearish retest regen that we're talking about the S&P doing. It came right up to the top of it. Volume there versus volume over here, and even there's one right here as well, right, that overlaps. That should be an area that should see some sellers as it comes into this big bar's bottom and so forth. So huge declines, 8,000 points off of this thing. To get a bounce up a couple thousand is really just a small bounce. Can this carry further? Sure it can. Will it? That's the question. And that's something that we should be watching as a result. Moving back to the notes here, Japan has some room to go, and so does Germany and France. If we look at those, I'll look at German market. It's a little bit weaker than France. The German market, and I'll pull it on the weekly as well. The German market, the swing point low is up here at 10.810. We're at 10.1, so we can move 700 just to get back to that swing point low. So, at this particular point, I think, if you could get to 10.382, which is the top of this bar, I think that would be, a pretty good bounce to start with. So world markets, yeah, they can bounce a little bit more in Europe. You've got the European Central Bank on Thursday this week. That may goose it, may cause it to sell off. There's hope that they're going to do something. Whether they do or not is another question. Everybody expects that. They also expect nothing from the Fed, which is the following week. Both of these decisions are coming up, so we'll have to see how the market reacts to whatever they do as a result. Earnings season heats up this week. So we had some earnings last week, mostly financials, a few scattered, Intel, some of the others. That's where, Xilinx, there were some chip stocks that really got bid up on that process. But as these earnings start to, come in over the next 3-4 weeks, they're going to come in across all the sectors, and we're going to get a much better look if we're going to see, Walmart type action, or we're going to see something else. Is the Walmart type action just specific to Walmart? Well, maybe, maybe not. And that's the sort of thing you'll find out as earnings get put out there. My personal belief is that a lot of the slop that was in these financial balance sheets, that you could, wiggle room, so to speak, a lot of that's been used up. And unless, earnings can be grown, and not just financial engineering, some of that's being taken away, unless they can really grow them, I think it's going to be harder and harder to actually get price rise out of earnings. So that's something we'll have to see, overall, if that's true or not this earnings season, and certainly next one. Next couple of weeks, probably the biggest 2 weeks of the year for this market in my view. And the reason I say that is because, going back to the S&P chart, as we come back up into this area, this is going to be a critical area. It's going to tell us whether or not this year really is going to, end up positive or not. It's also going to tell us whether or not, this whole scenario up here is more of a, in a classical term, is it more of a head and shoulders type situation developing versus, another, shoot to the moon type situation, right, that we've seen before. And that is going to be critical, right? Because if it's really this topping pattern, if this up here really is some sort of a rolling top, right, that's going to be a very different situation than anybody has traded for, 5 years now. And that's going to require a different mindset for those that are participating in the market. So it's going to be a big test as we come up here over the next couple of weeks. I don't expect you're going to see, even, let's just take the worst case scenario and say they sell it back down. The key is going to be is how do they trade back to here? Do they find support into here? And if they do, then you may just simply have these larger ranges, right, where you have this range and the one underneath it. You may just trade in this range for a while, which is going to beg the question of, are we eventually going to trade higher or not? And that, my take here, my guess is that we're going to see this market trade the rest of this year somewhere in this larger range. I don't think, maybe we could get up to about that high, but I don't think it's going to trade outside this range. If that's true, then this, in fact, could be some sort of a topping pattern taking place. And it, if you just look at the time period over here, how long this took, we're talking months. It can certainly take months for this to play out, and we could be into the end of the year, beginning of next year, before we actually get an answer to higher or not. So that's the S&P, and if you look at it elsewhere, the way this thing is mapped out now, the NDX, which is the strongest, also has that same sort of a pattern. And then if we look at the, and I'm on the weekly still, and if we look at the NASDAQ, it's the same thing. So one could argue on any of these indexes, right, that this move up, right, could be just simply rolling over. So enough of that. Let's move on. Technical picture is just barely a pause as the push higher continue. So as the market went up, right, it got that small pullback, and I'll pull the S&P back up. We got that very small pullback, and then, right, then it just shot back up, got over swing point high, now coming up into the resistance. And so the pullback was small. You trigger those ABCD structures now, and so from a short-term perspective, everything looks great. First week of earnings, they weren't sold, aggressively at all. It looked like it was going to be that way the first day of earnings on Tuesday, but then they started buying them again. And the trend transitions, if we look at the transitions here, almost everything has moved back to either bullish or sideways. You got very few that are left bearish. You got the financials, but outside of that, everything, well, the NASDAQ is too, but everything else is pretty much sideways to bullish on the short-term time frame. Out here, a lot of damage. Everything is bearish still. So realize that on a longer-term perspective, all right, you're going to have to get 2 or 3 of these to start changing, to change the probability of this actually going back to at least sideways or potentially bullish eventually. The longer this stays as it is, the more risk there is in this long term actually rolling over. And so, as I say, the next 2 weeks, maybe 3 weeks is the most critical point. Because unless we see improvement here, right, this initial improvement is nothing more than a bounce. So realize that as you're looking at these charts. You got to think a little bit longer term than just what you see right now. And so, I don't want to say it too much, but there's a high probability bearish retest regen just ahead of us now. The big bounce has been straight up, so we're quite extended as we come into it. The most bullish scenario, if you had to, pick out one, the most bullish scenario here would be for this market to just pop up, right, as it has, right? Maybe come into, somewhere into this area, maybe into 2045, 2050, maybe even 2060, and then come back. And when it does, do a bullish retest regen off of this. So you've got the transition here. Come back, hold this area right on the retrace. If you can do that, then this whole scenario may start to turn, and you may see those transitions on the intermediate term time frame start to turn finally. If it can't do that, then there's going to be problems in paradise. Intermediate term basis, you're right, it potentially could be the last escape, and I've talked about this before, and I'll bring over a monthly just to show it. We've had big runs, right? A very long time. Since 2009 it's been pretty much up, and since 2012 it has been up. You finally gotten the first serious kind of roll. Naturally they're going to come in and buy it, which is what they're doing. But folks, if you get under these lows and you break this swing point, things change, and they change on the long-term time frame. That is going to be the question. If we can't get underneath here, then longer term, bullish. If we do start to see this come back and roll over, say the end of this year, next year, right, then you've got a potential bad scenario taking place. So, you got to think a little bit longer term, but that is, to me, the biggest risk that's out here. Fundamentally, we still don't have recessions. We got all these numbers coming out of China tonight, and we got earnings actually kind of bought that first week, but it's a little early to just jump to the conclusion that they're going to buy them all the way through. We'll get a lot more information here in the next week or two. Fundamentally negatives, you got all those things that we've talked about before. One thing we don't talk about all that much is the Fed, and in general, not only here but around the world, has tried to solve a debt problem by creating more debt. I don't know that logically makes sense. You can't create more debt to solve debt. For a while it will work, but at some point it's a problem. You have to get rid of the debt, right? You have to let that creative destruction take place in order to move to the next level. We haven't done that, right? We've forced it to stay where it is. Now maybe we'll grow out of that somehow. Maybe we'll just, meander along for, 10, 15 years or 5 years, or, we've already gone 5 years. Maybe we'll go another 5 or 6 more. I don't know what that answer is, but I know that somehow that debt has to be worked off instead of creating more, and we've done more. We've also seen that QE, although it's a boon to asset prices to start with, you're seeing less and less of that take place now, and you're not seeing the kind of economic effect out of it that was pretended. It's been an asset boon to equity prices, and it has helped the economies, but it hasn't been a boon to those economies, right? We're kind of in stagnant growth mode, almost like what we saw in the 70s. And I don't know that QE is the answer, and I don't know that there is any other answer. So if this economy does start to roll over and we actually start to see recessions, I don't know how we get out of them. I don't know how or what the Fed, the central banks, the governments can do to get us out, to get growth going. And so I think those are big problems that are still out there and haven't been solved. And I know they're big picture, and I know we're not going to solve them here, but it is something to be thinking about. So with the, what to watch for, what to expect, last week we were looking for these smaller ABCD structures to form. They actually did, and they actually ended up forming in a larger way potentially too. We got some bullish scenarios for a retrace that did play out. And so that little weak pullback got bought on Thursday, Friday. So that also, turned out to be bullish. This week, we've got that post-options expiration. Everybody thinks, or most people I think are in the know, think it's going to sell down off of it. We'll have to see what happens there. My guess is that they may see a little bit more push up, and then we'll get some sort of a sell-off. And then that huge set of resistance, right, is that going to come into effect? As we push up into that 2045 to 2070 zone on the S&P 500, are we going to find sellers? Is there going to be a plethora of sellers at that level? I suspect that will be true. That's going to be the big question in the coming week, maybe even 2 weeks. Economics, you got earnings as the big story. There's not a lot of economics. There's a couple central bank decisions. The ECB on Thursday is the big one. You got that Chinese data out tonight. That's going to be a big one. And you got manufacturing indexes and PMIs towards the end of the week. And that's about it. Bottom line, we've had this huge uninterrupted run now for 3 weeks off the bottom. You got to view that as bullish on the short-term time frame. But now we're coming into that price zone where there's a lot of issues, right? And as we come into that area, right, on the S&P 500, as we come into this area, it's going to be, a place that you should expect sellers to show up. And if they do show up, right, this market's going to turn around and go right back down the other way. And then you have the potential fear, right, that this really was a top, which could add to the selling. So, as that takes place, that's going to be something to really watch. Longer term time frames typically carry more weight than the short term, so even though it looks great now, I still lean towards the long terms as being more important, and they're all bearish right now, so we'll have to watch those and see if they reassert. And despite this near-term strength, right, this is the zone. This is what we have to be focused on. Portfolio-wise, last week we closed some trades. We, made some money on Apple, took it. Apple's coming up with earnings, so we're kind of out of the way there. Teak had a big push Friday. We got some money out of it finally. And that was the main things last week. Last week we opened a couple trades with the stocks, and then we took kind of a slow mover in Campbell's Soup, which hasn't done anything other than sell off since we got in. We also added back the DGZ. I want to take just a quick look at a couple of these. I'm going to start with that gold spread. And one of the reasons we started this is that, there's this nice ETN that's out there that allows you to do covered calls basically on gold stocks. It's a great way to, pull dividends and essentially, take kind of tax or less tax gains, cheaper tax gains, right, on a stock. The problem is that, if you pull this back and look at it, right, on the longer term, this thing has sold down. So even though you're getting a dividend out of it, you're getting price depreciation. And so what you do is you step on the other side of that and you protect that price depreciation with some sort of an instrument that will allow you to do that. And the DGZ has been that, right? And so we keep using the DGZ as it pushes higher. As it pulls lower, we buy it, and then we sell it as it pushes back up. And we've been doing that now for, I don't know how many times, we could go back and look. It's been at least 4 of them already. And so you capture the dividend gains, right, the lower tax rate structure on those, while you wait for gold to eventually turn. Now, gold hasn't turned, and it's probably going to take it a long time before it turns. And if I pull up the gold chart, let me find that. We could actually look at that. It just came back in. So here's the gold chart. It just came back into, put it on a weekly, a retest regen here off these prior swing point lows. So you're getting, this kind of a test that took place. Pretty decent volume took place. Probably going to pull back. As it pulls back, we should see the DGZ go up. Right, we should see the GLDI come in, and this is probably going to be the time, this next time, where we want to actually buy some of that DGZ, the GLDI. We're going to probably try to buy some of that as this comes back in, because this does look like it's trying to put in a bottom finally. It's not guaranteed yet, but it looks like it's trying to put in a bottom, and we should respect that it's doing that. So in the next week or so, as this pulls back, assuming it does, right, then we'll have to look at this and say, okay, should we buy it? Should we come in here and actually buy this and, add to that spread and make it larger? It's something that works over time if you just use the volatility of the market. So as this thing, comes down, goes up, right, you keep working into that spread, to your advantage on the assumption that eventually you're going to find a bottom somewhere, right? And this is going to work higher. And at that point, you're going to want to just stick with the GLDI more so than the DGZ. In other words, keep the heavier weighting on the GLDI. So that's the gold stock spread. Still working that, and I think we should continue to work that for a while. There's not a lot of safe places to be. You want some of your money in something that's safe, that's giving you a good return. The other stock to look at is Teak. Now, Teak, even though they had a nice big spike up on earnings last quarter, they actually have a little bit of a slowdown in their business, or they showed a little bit of a slowdown in their business last quarter. And so it ended up being a huge range after that spike up. Now, the short interest in this stock is huge. It's like 18%. And so what you're going to get when you have that kind of a situation is you're going to get these big spikes that either do or don't stick. And given that we have earnings coming up, right, you can't expect it to stick in front of earnings. And so what you do is you put an order in to sell, and that's what we had, just laying out there for a while now. We had an order right in here as it came into this bar, that bar, the bars over here, right, and this bar. As it came into these areas, that was the place to try to take some money, on the idea that as we come back towards earnings, that you could easily drift back down into these lows, which would be the place to put some more exposure on. So you take what they give you on the assumption that it won't be able to hold, given where it is, given the way the technical picture looks, right? And then you try to put some more exposure back on, $3 cheaper, which is 10% or so, on the expectation that this is going to continue on a longer term. That also happens to be almost the dividing line in between these. I thought I'd just show that. If I pull this over to a weekly chart, right, this thing still looks really good. So you have this big swing point high, and let me draw this in. Break over it here, do an immediate retest. Remember, immediate retest means that you more than likely will get to the other side. Well, that's what it did. Tested it 3 times now. The volumes over here, not great, right? They're so-so. The volumes on the test, about the same, a little bit less. So far, this still looks good. Big run up, a lot of consolidation. Can it make the next move? You're assuming that it will. And so you just hang in there, you keep working it, and you try to put on more exposure if and when the opportunity presents itself. You'd like to get it on down here, right? But if it breaks out again, right, if it comes back up here and this proves to be a good retest regen, then you have to buy it here as it breaks. And so that's Teak, and that's a little bit more about what we're doing there. Finally, if we look at the strong versus weak sectors, you got quite a few strong ones still, right? Multimedia, most of it technology here, some real estate. The insurance actually has ended up stronger than I expected. Food and beverage and leisure still looking good. Technology again, cloud and semis. Weak sectors, the only one I see is hack that really showed up weak. And that actually affects one of our stocks, which is Palo Alto Networks. And so I want to pull Palo Alto up here. So PANW. If we look at this, this one is struggling to get going. And so, it's had it's had an ABCD structure here down to there, right? Plus this larger kind of ABCD. And, my take here, I actually shouldn't draw it that way. It's really from here to there and back down, right? Which actually completed. So my take here is that this actually has the scenario now to try to work higher. We'll have to see if it does or doesn't. The fact that the sector is struggling makes it hard for this to get going. So you have kind of this range and that range. You can see it's right here battling that range again. So I want to see it get over this. If it can't, then we're going to have to probably sell out and wait because we're too early on it. ABCD structure, potentially take it to new highs. So let's see how it plays out the next week and how the general market plays out. Okay, that's it for today. So, hopefully that gives you a sense of where we're at and really kind of brings that big picture back into focus, because I don't think we should lose sight of that. The next couple weeks are really critical weeks. We're going to find out whether those intermediate term bearish trends really start to shift and start going sideways or not. If they don't, we probably are seeing a topping process. If they do, well, then, these bulls are going to have their way one more time. That's the key question. That's what we got to keep monitoring, and that's what we'll watch. Thanks. As always, if there's anything I can do to help, let me know. And I'll leave it at that for today. Take care.